Hello everybody, I am Tushar Jain, CFO and Research Head of Ajay Money Guru and TusharGlobalServices.com. Welcome all of you today on 2nd May 2025. In this episode, we will be discussing about latest movements in the commodity market, especially focusing on raw sugar. Breaking news from the ICE futures market reveals a significant downturn for raw sugar on Thursday, May 2nd. The July ICE raw sugar contract trading under the symbol SBN25 plummeted to a 3.75-year low, settling at 17.16 cents per pound. Earlier in the day, it even touched 17.08 cents, marking its weakest point since July 2021. This substantial drop of 0.09 cents or 0.52% highlights the strong bearish sentiment currently gripping the raw sugar market. Interestingly, while raw sugar faced downward pressure, London white sugar futures showed a slight upward movement. The August London white sugar number 5 contract with the symbol SWQ25 edged up by $1 or a 0.20% to close at $493.80 per metric ton. This divergence suggests different underlying dynamics at play in the white and raw sugar markets. Several factors are contributing to the bearish outlook for raw sugar. Fresh supply from Brazil, the world's leading sugar producer, is a key element. Industry group Unica reported that sugar output in Brazil's center-south region saw a 0.13% year-on-year increase in the first half of April, reaching 731,000 metric tons. This marks the beginning of the 2025-26 season, and the initial production figures are adding to the expectation of higher global supplies. Further reinforcing this, Brazil's crop agency CONAB has forecasted a 4% year-on-year increase in the total national sugar output for this season, projecting a substantial 45.875 million metric tons. Adding to the negative sentiments are macroeconomic concerns stemming from the United States. Recent GDP data revealed that the US economy contracted in the first quarter of 2025, the first such decline in 3 years. This contraction was notably driven by a sharp increase in imports as businesses accelerated purchases to get ahead of potential tariff hikes. This weak economic data has amplified fears that aggressive US trade policies could potentially push the global economy into recession, dampening overall demand for commodities. It's also worth noting that trading volumes were thin on Thursday due to the May Day holidays, which led to market closures across Europe and Latin America. Lower trading volumes can often exacerbate price swings, contributing to the volatility observed in the raw sugar market. Looking at the physical market, deliveries against the May ICE raw sugar contract totaled at significant 1.48 million metric tons, according to exchange data. While this is substantial volume, it is lower than the delivery volume for the May contract last year, indicating potentially subdued near-term physical demand for raw sugar. In conclusion, the current sentiment in the raw sugar market remains under pressure. This is driven by a combination of strengthening global supply outlook, particularly from Brazil, and concerning macroeconomic headwinds, especially the economic contraction in the US. The risk of further downside in the US raw sugar prices remains if demand does not show signs of improvement. Thank you for tuning into Ajay Money Guru. Stay informed, stay ahead, and I'll be back soon with more commodity market dynamics and analysis. Don't forget to like, share, and subscribe for the latest updates. Thank you and good day.